This is Randy Finney with the right side of the chart, and this is a midday market update for Thursday, May 9th, 2019. This is the second update today. I already put one out, early morning session update for members. When you have a lot of volatility and more so expected movement in the market as well, I'll keep the updates more frequent. Just do it quick because this is just a recap of the last one. Here's the QQQ daily chart. There's support there around 182.83. Overshot it slightly. Remember, this is a term I made up called momentum fueled overshoots. Anytime you have a lot of downward velocity, like you had it back here too, into a support level, this candle right there, you tend to overshoot that support level due to the momentum. It carries it through. It's like the analogy I use is, imagine a pitcher clocking a 90-mile-an-hour fastball. That catcher's glove is going to snap back before it returns back to the point where the ball entered it. And it's the same thing with when you have sharp moves like this. Works to the down and upside. So all that is so far is a successful defense of support. We also hit the first target on the QQQ trade, and which I mentioned, if you're an active trader, you can reverse and go long. That's what I did. And if you're a swing trader, I still think there's more downside after a bounce, and I'll go over where, well, I already went over in the first video where we might bounce to today, but let me cover some charts. Here's a 1-minute chart, and this was, in fact, let me show you the setup I put in the trading room today. By nature, I'm a swing trader. That's my primary trading style, not a day trader. In fact, you know what? I'm going to pause this video because I didn't even have my orders in yet. I was mentioning selling just shy of a backfill that gap. Hold on one second here. Okay, whew, that was close. I wanted to fire off. I had added to some day trade. I told you I reversed this morning, covered the shorts, and then added and set up a day trade here. Now, the difference of a day trade and a swing trade, day trades, I'll typically take a much larger position. Many times I would on a swing trade because you don't have overnight risk. And so the day trade setup posted today, just a while ago before we broke out down here after that video this morning, was here in the trading room. Posted, well, it was back here earlier than that. Here's the first chart, so I'll just show you. I mentioned a break on both. You have to see both QQQ and SPY take out these levels. So you could see what happened is this morning we went down. We're quite oversold. We're just a hair below. We're still close enough to those support levels on the broad markets. And you can see here we're basing. The market was pretty much sold out, putting in a series of higher lows. That's what I like to see for potential bottom. When you're going down, downtrends work just as well here on 1-minute charts as they do on daily or weekly charts. And so you can see there again by those the reactions, we were making a series of higher lows, and we were tapping in this sort of this basing pattern here on both QQQ and SPY. And so I mentioned, take it, set a trailing stop. You can either run up for a backfill, but what I had said on here in this post too is I would not go for a full backfill of the gap. Why? Because everybody's looking at that. And I'm talking a day trade. There might be more upside here in the coming days there on a swing trade, but this is the breakout point here. It broke out on QQQ. That would have been your first logical target, the bottom of the gap, and we did pause there a little bit, and then what I just showed you here, and we'll get back to in a second, all eyes would be on a full back gap fill. So therefore I'm not going to hold out for 185.60. I paused the video and fired off a bunch of NQ, TQQQ, and things like that in different accounts. So I'm out, and that's fine. I'm flat. We may go up from here, and I'm going to go over the longer term charts in a second. This is just short term stuff. SPY, same story. I said SPY had to break 284.53 and to run, and it broke it along with, and you need both of them to break, and they did. And a little back test, a little dip below, came back up, hit the gap, and then went on to let's take a look. Let's go back to those charts. Okay, so here's QQQ. Got out just in time there. Normally I have the orders placed, but I'm trying to answer questions in the trading room days like this. You guys come first, and then my own trades. Normally I'll put the orders in ahead of time, so I fired off, got out all that stuff there, and you can see we pull back. And it's a lesson to be learned, is why you don't hold out for the last penny, and why on all the trades we have, I always set my price targets on the official trades. On if they're short trades, I'll set it just above the actual support level that I'm watching and expecting a reaction for the same reason. If too many eyes watch it, sometimes the buyers step in. Sometimes you'll overshoot it to the upside, but the key is, to get profits here. What's the point of trying to milk out a few more pennies? And so this is a live chart, and you can see what happened. They stepped in and they certainly sold. Same thing on SPY. That's why I said I would not hold out for a full backfill of the gap on a day trade. All right, so let's go back. I know a lot of you aren't day traders. Let's look at the charts. What happened today? Here's that level on SPY. I'll cover this one, maybe put it out as a public video. So I'm not going to cover our price targets. As I mentioned, if you remember the site, that was in the last video. And, we hit our price target, first target that was here. We have additional targets, which I'll keep off this video so this one can be for the public. But there it is. You had that nice big gap right there, the reaction high, and we overshot it a hair, but so far we held it. Now, we're not out of the woods yet. Let's get into the charts here where there's been a lot of technical damage. Oh, I'm sorry, that was SPY, not QQQ. My bad. Hold on one sec. Okay, here it is. So yeah, the first target on SPY was set just above this. We had really nice intersecting resistance levels here. I'm going to zoom out from the 60-minute to a 2-hour chart, and this is why I was favoring a bounce here. You had a pretty well-defined trend line right here. It's a secondary trend line. This is the primary trend line off the lows. That broke. This is bigger picture stuff. This is, the same as on the daily chart. This is a 120-minute candlesticks here, but that's probably just the first drop down, and we'll probably take out this trend line and continue lower is my guess. Let's see how today closes, because I mentioned that in the other video. There's some key developments with some of the big market-leading FANG stocks. I'm going to get to that in a second, but right now we had not one but two, and I really like to see when you have intersecting support levels. The odds favor at least a reaction, at least a minor bounce on the initial tag of that level. Now, the next time it goes, I'll tell you right now, that's also our next sell signal. When today's lows, let's just say today's lows, when they go with conviction, we'll have taken out both these levels, and that'll open the door for more downside. And that's if and when that happens. It's still, anything's possible. Maybe this is just a correction. Remember, we've had a couple corrections along the way since the lows back in December. Here was one. There was another one. They just proved to be buying up. So there's, I'm not going to say there's nothing that says this it can't be the same. There is a lot of evidence against it, and I think there'll be more downside. But as of now, like I said, support is support. So the initial tag of support, you usually get a reaction, and hence the reason why I list multiple price targets for active traders that want to maybe cycle out quick profits, or just maybe book full profits there and be done. Take the quick, easy money on a lot of these trade ideas. SPY, you can recall there's a support zone that I was looking at the other day, and we kissed the bottom of it the other day. We briefly shot below it, but again, momentum fueled overshoot. So far we're back up on it, and it's a pretty significant support zone. There's previous reaction here. There's a gap. In fact, that's what we did right there. If you can look closely, we backfilled that gap right there. So always keep an eye out for gaps. They're very tradable. They usually get reactions at least on the initial tag or the backfill of a gap. So that's so far what contained. Now let's again not forget the bigger picture. I've done quite a few videos lately. Most of those were from members. We talked about the semiconductors, and I explained my thoughts on QQQ, where you can either try to bat a single or a double, or swing for the fences and go for a triple, a home run, and maybe even a grand slam, and that has to do with just riding out counter trend bounces. The one thing that I can assure you, there are no guarantees in trading, but the one thing that I can guarantee you is that when volatility expands, it cuts both ways. And these counter trend rallies, they shake people out. They shake most people out of their longer term plans. And anybody that thought the market might be going down here, and ran tight stops or second guessed every time we had a little kickback rally, they were shaken out and probably whipsawed to hell back here in the fourth quarter. So again, it's up to you whether you think this is a buying op on the road to new highs. If it is, I don't see why you're not buying with both fists right here. It's one of the biggest corrections that we've had, if not the biggest correction since the December 24th lows. And if you're of my mindset where this could be the beginning of a much larger drop, and you're not a very active trader, forget about all those 1-minute charts and 15-minute and 5-minute charts, those setups, and just maybe at this point lower your stop to you could lower it to break even on any of the short trades that you've taken lately, including the ones on the site, or leave the stop in place because it's still, we had a pretty good entry there, and we could have a nice kickback rally and still head much lower. Before we wrap up, I want to talk about the FANG stocks here. All right, so in recent updates, I had mentioned that I had check marks across the board. QQQ broke down, which is what I wanted to see, and as I said, the market won't break until tech breaks, and when tech breaks, the market breaks. It's that simple. It's what I said back here, it's what happened back here, and it's what happened here again. There's XLK, the tech sector. This is the market. It's 20% weighting, 1/5 of the S&P 500, and much more than that in the NASDAQ 100. And so you can see just a beautiful trend line, wedge, steep divergence. And when you have a crowded trade that breaks, this is what happens. You get a rush for the exits. A lot of longs trying to exit at once. So we're not in a the sky is falling mode or anything yet. This right now is nothing more than a long overdue correction, pretty healthy one, but about a 6% drop. And so, like I said, in the near term, we might see some more upside. We may very well backfill and then some those gaps that I just showed you a minute ago on QQQ and SPY. But I wanted to point out that this to me looks like the initial leg down. We had a breakdown here. We had a correction there, but what makes this one different, you have this beautiful, well-defined uptrend line, and you're just that much more overbought at this point in time, or you were at the recent highs. Bullish sentiment was through the roof. Just about everybody thought the market would continue to go up. Although I take that back. I'm sure a lot of people, even longer-term bulls, were probably looking for at least a correction. So that's where this gets tough, guys. And it may be. Is this a correction now on the road to new highs, or is it just the first leg down and a much deeper correction, or even new lows in the market to come? I said this to members recently in some of the videos that where some of the clues that I'll use to try to gauge that is how the correction develops. And one of those things is what happens at, like, for example, today we hit support and we had a reaction so far, but look, we're still red. We're still down 0.58% on QQQ right now. And so at least a minor reaction was likely on that initial tag. Now where we go from here, that will may give us some clues. In other words, do we mount a very healthy bounce, come on back all the way up here to, let's say, that key 187.76 level before another leg down, or do we just blast on through it? Obviously that would be the most bullish scenario, obviously, going up here, not look back, make new highs. As far as correction mode goes, a rally all the way back up to 187.86 followed by another leg down, I think would still be in the realm of a healthy correction. However, should we fall well shy of that 187.76 level, should the dip buyers fail to step in here and take it at least that far, and we break down through today's lows and head on down here to maybe the next stop around 178, and if we did it very soon, to me that would be quite bearish, and it'd be a little bit of a tell of the supply and demand dynamics within the market right now, just showing that you have a lot of trapped longs and people that want out. All right, so we're not going to know the answer to that, most likely, at least not for several days, maybe even a couple weeks or a week or so. We'll see. Now to the FANG stocks, and we'll wrap this up. So we have the three big ones that I was watching that haven't yet broken trend. Remember, QQQ, SPY, XLK all broke trend, but as I said, only 2 of the 5 market-leading FANG stocks have broken trend. And that was Alphabet after their earnings beat, or Smackdown, I should say, their earnings Smackdown. And what was the other one here? Let's see, not Facebook. Oh, no, I was referring to, sometimes I'll use the acronym FANG plus I, FAAMG plus I, Intel. I know it's getting a little quirky with those acronyms, but Intel, I think Cisco might have leapfrogged it, but it used to be, they're very close, the sixth largest component, and Intel is right up there, one of the top components of the NASDAQ, and that one, obviously, on its earnings, was smacked down really hard. So there's Intel. They've all taken out trend except, again, these big ones here. So I'm going to go back here. Sorry, let me load QQQ so my watch list loads. There's Microsoft. So Microsoft, I had a trend line like this, and you can see that catches a lot of reactions there and has one little whipsaw signal here. And then today in the video, and I think in recent videos I showed you, we could pull it out here. And I like to do this, I'll call that the benefit of the doubt, or BOD trend line, because I can connect this point, that midpoint there, in today's lows. What I said in today's earlier video, there's still a chance these three big catch that support if they can reverse. So far they have, and print a close on or above these trend lines the way I've modified them here. So there's Microsoft, and there's two takeaways as well. The other takeaway would be a solid break below that now. There's no more stretching that. There's no more benefit of the doubt. We need at least 3 reactions to validate a trend line. I say that because any 2 points can be connected at random. So if we broke down now, and let's say there was a big candle down to here, that's not a trend line in my opinion. That's just, again, connecting 2 points at random. So this is the better fit of the two, but this is the benefit of the doubt. And when you're in an uptrend or any trend, you want to give the benefit of the doubt, wait till the last of the two to break. So there's Microsoft. These are the last holdouts is what I'm saying here. And Apple already took out, this was my BOD trend line. This is my preferred trend line, BOD trend line. Yesterday we closed right on it. Today we gapped down below it. And Apple would take, it could do it. It would have to rally pretty hard to get back up above there. The day is young. It's up almost 1 o'clock now as I'm doing this, and so we have 3 more hours to go. Anything's possible, but it looks like we're probably going to get a close there. And I also mentioned this in recent updates too, is that we had also horizontal support right below, and that's why I just wasn't ready for a real meltdown in the markets yet. Pretty good support right there. So although Apple broke trend, as I always say, don't short a stock that breaks a trend line if you have a horizontal support or another trend line just below it, because again, there's your benefit of the doubt line. It's not a trend line, but that's your next support level. And so Apple kissed that at the lows, may come into back test, could regain it, but I favor a back test and then a break of that level. So there's your next sell signal. That's when Apple, I think, will be done, let's say, at least for the near term, on a solid break and a close below 197.70. I don't see a whole lot stopping it till it gets down here at about 182.50. So there's a little work to be done. I'm going to look back to Microsoft because I wanted to mention that this one already gave up a pretty important support level. We had the gap right there. There's the earnings gap. And this was something else that happened today that's technically significant. All those that got giddy and bought Microsoft and a lot of the FANG stocks after earnings, they chased it on the gap. They've now been, all of them, wiped out. They're all below the gap. That means anybody that bought Microsoft, even single share of the stock, anytime after they reported, is now underwater. However, it is at trendline support. There's a trend line, my benefit of the doubt trend line. I had an earlier trend line there. That one's broken, but let's give this one the benefit of the doubt right there. So there's another one to watch. My point again is if all these 3 break, Apple, Microsoft, and Amazon, then we're probably going considerably lower. These will be some pretty powerful sell signals. Same thing. This is a trend line also off the lows on December 24th. Benefit of the doubt right now coming in, capturing that low back on March 8th. Right at support as well. So you have 1875.50, pretty decent support on Amazon. If that goes, just like I said, I like to buy pullbacks to dual intersecting supports. I love to short stocks that break dual intersecting support levels as well. So that'll be a nice sell signal on Amazon if and when that breaks. And I don't see a lot stopping it till down here at about 1752. But again, like I say, support is support until unless broken. So right now, so far the market has held support and could certainly continue to rally. And maybe we break those levels, but we break them, down the road, a few weeks, a few months. We'll see. Oh yeah, and keep in mind, just like Microsoft and most of just about all the FANG stocks, I think Facebook has faded almost all but not quite all the gains after their earnings. There's the earnings gap right there, so you can see Apple. Anybody that bought Apple after they reported has now been smoked. They're underwater. And so what that has psychological effects, and this is how technical analysis works. It's not just people drawing lines. There's logic behind it. It's actually psychology behind there, and that's why a support level like this works. Everyone's buying pullbacks. They're all watching that level, and when it breaks, especially when you have a topping type pattern here or a bottoming basing pattern, that has large implications. This is where everyone's piling in the Johnny come latelys that buy Apple after a super long multi-year rally. They get into the top. The stock treads water for sideways, then it breaks support. All these people are left holding the bag right here. They're the bag holders, and that's how tops come. And so as it goes down, they're underwater, they're feeling pain, they're just waiting and hoping to get back to even. And when they finally realize they won't get back to even, that's usually when you get the final capitulation type selling. They give up, and then a new set of buyers step in. It's the natural cycle thing. So those are the levels we're watching right now. And let's just go back to the 1 minute chart and we'll wrap this up. Let's see if we backfilled those gaps yet. Nope. Came back in here, but we're still below it. Again, so it's probably if you're to just sum this up, if you're a swing trader, not a very active trader, I think, at least in my opinion, it's best to sit tight and hold on to any short positions you have. If you're a long side trader and you are long and this is concerning you right now, well, I showed you some levels that could hold, and if they break, it'll probably open the door to more selling. So if you held through this point, we've already found support. Really no reason to sell right now. Just you can use today's lows as an objective stop, and maybe we'll get a kickback rally. Maybe the market takes off to new highs, and you could certainly trail your stop up from this point as well. So those are the two options for you. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.